Just a minute, please. Okay, so before starting this event proper, we would like to ask our distinguished panelists to give a brief introduction of themselves. So, Mr. Gordon, would you like to start your introduction first?
Sure. It's been a while since someone called me by like Mr. Gordon. All right, so yeah, very quickly, obviously co-founder of Surer. On a high level, Surer is a cloud-based insurtech platform with a digital ecosystem of intermediaries and insurer. Prior to co-founding Surer, so this was about 10 years back, I was with this little startup back then called Property Guru. I joined as a marketing exec, left as head of monetization, was there for 6 years. Really inspiring journey, right? Interacting with the founders back then. Thereafter, similar story, I joined Carousel, was still a little startup-ish. We were still working out of Block 71, about 50 employees. Was there for 4 years and left as category director. So I guess I've been a lucky charm, right, for these companies, like both have turned unicorns now. Hopefully that time's a charm for myself as well.
All right, thank you, Mr. Thank you, Mr. Gordon. Also, you can just arrow someone else to do the introduction.
Like Gavin is my friend, so I will not arrow him. Let's make friends, Mohandass. You want to go next?
Hey, Gordon. Hey, guys. Thanks for making time on this panel. I know it's a bit late on the evening. I guess all the students are very busy studying during the day, so we only can do the panel at night. But very happy to be here. Hopefully, somebody wants to do fintech startup after listening to us speak about this. Quick introduction of myself. I was the furthest away from the startup space when I graduated from school. When I graduated, I was just surrounded by guys who wanted to do investment banking and consulting. So I started my career in a consulting job at BCG. But over time, I got bored of making decks and Excel for clients. Wanted to do something more, right? So I was always kind of passionate. After that, I did a bunch of digital projects at BCG. Got pretty excited in financial services and wanted to kind of stay in that space. But also kind of knew that jumping from like a BCG consulting gig into a Spenmo day one would have been disastrous. So I thought, better to go to a scale up in Southeast Asia, learn from good operators, guys who build big businesses. So eventually I ended up at Grab, led corporate strategy for them, had the pleasure of working in payments, insurance, lending, wealth management. And the last thing I did before I left Grab was actually the digibanking application. So very excited to see, Grab come out with the digibank as well. And then by the time I left Grab, I think it was a natural progression for me. I just kind of figured out it was more B2B and more early stage. And by the time I left Grab, it was just like a massive company. And then I left Grab in 2019 to start Spenmo. So that's my story.
All right, thank you, Mr. Mohandass. And you can arrow the next person.
I know Gavin as well, so I need to point Joel now. Joel's next.
Hey, looks like Gavin is the common friend amongst all the panelists here. So he has the privilege of going last. Joel here. I'm currently co-founder and country head at Aspire. Before this, I've kind of been an entrepreneur all my life. Took the slightly naive, foolish leap compared to Mohandass maybe. Yeah, so prior to starting Aspire, I was involved in the e-com space, ran 2 e-com startups, and eventually exited and yeah, started Aspire together with my co-founders. And yeah, today Aspire is basically an all-in-one business finance platform. Our flagship product is a business account. I think since then we've grown to offer almost everything that a business would need in terms of finance, right? So be it managing your expenses or even managing your inflows. And we also provide credit to grow your business.
All right, thank you, Mr. Joe. And that leaves us with Gavin. So Gavin, would you like to introduce yourself?
Yes, thank you, Varunesh.
Yeah.
Thanks everybody for attending today. And I'm having lots of fun chatting with lots of my old friends today. So I'm Gavin, one of the co-founders of Brick. We are an open finance startup in Southeast Asia, building new age financial infrastructure for both financial tech and non-financial tech companies. And I was a SMU graduate, so like many of the students here today, graduated from law school, practiced in disputes for about 2 years, decided to go back to my first love of finance and financial services and financial markets, dived headfirst into fintech, and started my journey in a mobile banking, mobile money startup in Myanmar and Thailand. Eventually, that startup called Ujibo lost out to the telcos and met the co-founders of Aspire, including Joe. Thought they were really smart, decided to join them to build the first SME neobank for Southeast Asia. Along the way, saw the problems with the lack of good financial infrastructure for Southeast Asia, then eventually built up enough conviction and decided to tackle this piece for Southeast Asia and enable future generations of fintech entrepreneurs going forward. So yeah, that's me and a bit my journey.
All right, thank you, Gavin. So next, we'll be having like a sort of a small introduction of our both clubs. So Jared will be introducing SMU Eagles first.
Yep. Okay. Hi guys. So SMU Eagles is an entrepreneurship club in Singapore Management University. So we do panel discussions like these AMAs, and for our flagship event, we have this thing called the PAK Challenge. So we are rewarding the best student startups of 2021 this year with a total prize pool of 70,000 Singapore dollars for the top 3 places. So the first place will get 50K. The other 20,000 will be shared by second and third place. So if you guys have any startup ideas, you can try for it next year. And our finals will be happening this coming Saturday. I'm just putting the link in the chat. If you guys are interested, please register. There will also be 3 other panel discussions during that day itself. So it will include a panel on VC. So Sequoia India, one of the investors is coming down. Genesis Alternatives, Kalaichelvan, Vertex Ventures, these big names in that. A panel on women discussion with Utrip, as well as finally a media panel with the founders of SGAG, the founders of the Smart Local, and the founders of Gravity Media will come down. Yeah, so looking forward to see you guys there, and I'll pass the time to Arun.
Okay, thank you, Jared. So I'll do a short introduction on SMU Fintech Club. So SMU Fintech Club is an interest group for students who are interested in how cutting-edge technology disrupts the finance industry. And we organize various industry events such as technical workshops, industry sharing by professionals on various fintech domains, hackathons, and case competitions. And through these events, we believe that students are able to get a glimpse into the fintech industry and also appreciate how technological innovation can affect and change the world. And a short history about SMU Fintech, it was established in 2015 as the first fintech club amongst the tertiary institutions. As the fintech space was gaining momentum in Singapore, the club was initiated to raise awareness about the fintech space and how technological innovation can revolutionize financial institutions to provide quality services with increased agility. And the club was also used as an avenue for students to learn more about the emerging trends, which constantly optimizes the industry. And in 2019, we actually moved up from Sales School of Computing and Information Systems to SMU's Institute of Innovation and Entrepreneurship, where we were able to ignite, nurture, and incubate aspiring students and entrepreneurs to become trailblazers in the fintech space and develop innovative solutions. So that is the brief introduction of both of our clubs. And before we delve into the Q&A's panel discussions proper, actually we have organized like a short icebreaker session where we'll be just asking you guys random 4 questions. So we'll be just arrowing you guys to answer them. So Mr. Gordon, since you started your introduction first, what is actually your favorite show?
My favorite show?
Yeah, anything you like to binge watch?
It's like so common, right? Everyone's watching Squid Game nowadays. But besides that, I'm into documentaries. So the last one I watched was I forgot the title, right? But it's like the relationship between Malcolm X and Muhammad Ali. So I guess
I think I've seen it on Netflix.
yeah,
I know what you're talking
my
about.
latest favorite show. Yeah.
Okay. Next, Mr. Mohandass. So in an alternate universe, who will you want to be like? Like for example, like now you're an entrepreneur, but given a chance, like in an alternate universe, who would you like to be?
Dude, this is a tough question, man. I feel like I'm living my best life right now. But hey, if I could become something else, maybe dude, rocket scientist or some guy like an astronaut, I think that'd be cool.
All right, all right, that's great. That's great.
Also, you can just call me Mo, man. You can drop the Mr. Mohandass is like, I feel like I'm getting scolded by my parents or something, Just call me Mo.
All right. So just call you Mo then. Okay, next question, Mr. Joe. So if you could travel anywhere, aside from the COVID restrictions and whatnot, where would you actually want to go?
Oh, wow. I'm particularly fond of Italy, but I don't think that's a very interesting answer, right? I think maybe something interesting that I can share in light of the COVID restrictions, right? I actually picked up sailing because it was the closest thing to like leaving the country, and I've really enjoyed that, and it's kind of helped me to kind of manage my mental state during this time because I'm used to traveling quite a bit. Yeah, so nice tidbit.
All right, thank you, Mr. Joe. Okay, so for Gavin, our next question is, what do you think are the 3 top skills an entrepreneur should have?
Wow, this is the toughest question. Let me think. Top 3 skills an entrepreneur must have. One is optimism, a never give up attitude, and always be optimistic. That's super important. If you give up, that's game over. Then resourcefulness, that's very important. And then being able to channel your passion, that's really important because you cannot build a great organization or a great business alone. You need great people to join you. And to make that happen, you have to communicate your passion, sell your story, get people to join you to build something great together.
All right, thank you, Gavin.
Okay, yeah, maybe building on that point, right, and maybe we'll open this question to everybody, right? Do you have a mentoring figure in your life, and how has that mentor impacted you on your journey?
Well, keeping in trend, I think I can go first on this. And since we were talking about Winnie as well, right, Jared?
Yeah.
So just for context, there's this lady called Winnie. Jared knows her as well. She's one of the coaches at Antler. I've known this lady called Winnie for the longest time. Was my chief tormentor and ex-boss at both Property Guru and Carousel. So going back to that point on mentoring figure, I guess for me, a lot of the mentors or the people I look up to or seek advice from, they all are people that I have worked with, seniors, ex-bosses, or counterparts, right, in previous companies. So sort of like a natural thing for me, right, when I've got questions about the business, I'll reach out to them to get their views, get their advice. And a lot of times it's been super inspiring, right? They might not give you like a direct like you should do this, but conversations have always been sort of like inspiring on what you should be thinking about and what should not be. Yeah.
Oh, I can go next, I guess. Don't want to keep the silence too long. I think obviously, like I think in our world, like you get to speak to a lot of people. There's a lot of bosses and managers I've had before, so everybody kind of becomes a mentor. But I think one of the biggest ones in my life was probably Ruben Lai. I worked very closely with my Grab. He now currently runs Grab Digibank and Grab Financial Group. But he's been an amazing mentor, and not in the sense of like telling me exactly what to do every day, right? I don't work for him anymore directly, right? He's an investor now in Spenmo. But I think just kind of he has seen that journey of like Grab Financial Group when there was no payments in the system at all, right? Grab was still a transfer company, so he's almost built a startup on top of another startup. And I think just that the lessons of like building a big business, growing from 0 to 1, finding product market fit, and then kind of scaling the business. And those lessons are incredibly useful, right? Because there's a lot of content out there, that's very Silicon Valley focused, right? You can learn all those things, but sometimes it's hard to localize that in Southeast Asia, right? So it's best to, I found it very incredible And just useful to have a mentor who's been in this region, who's kind of built a payments business in this region as well. So just kind of looking for advice. He's also the first guy I told when I was quitting Grab. So he gave me his blessing to go and do on something else. So he's a good mentor to me.
How about you, Mr. Joe?
Yeah, you can also call me just Joe. Yeah, so I actually there's someone who I look up to quite a bit. He was an investor in one of my earlier e-com startups, and actually incidentally he's running one of the big international fintechs infrastructure pieces, right, in the region today. Yeah, his name is Rohit actually, and aside from giving me business advice, which I think if anyone knows me, I tend to think about business maybe 23 or 24 hours. But one thing I really value Rohit for is the life advice, right? When things go tough, right? Because the journey as an entrepreneur is not easy. And I really found, the life advice, that optimism that maybe Gavin was alluding to, was really helpful. Yeah.
I'm gonna break the trend a little bit. Definitely your bosses, more senior mentor figures, they definitely help and they've played a huge part in my life. But one amazing source of mentorship I've received from are actually my peers and friends. So including close friends like Joe or the founders of Buku Warung like Abi, etc., who maybe sometimes they're experts in certain fields that you're not experts in. Maybe it's a marketing topic. I might ping Joe and ask him about it. Or founders who are just further along in the journey. You are at seed, they are at Series A, and then they've just very recently seen how things played out between seed to Series A. Just ping them for some advice. I found all this ad hoc mentorship from friends and peers super helpful.
All right, thank you, Gavin. So this next question is actually more towards regarding the mentors itself. Like, how do you actually go about finding a mentor to actually advise you on like the choices you have to make? And would you actually recommend getting a mentor? So Gordon, would you like to jump on that question?
Well, how do you go about finding a mentor? I guess if you've got a specific list of people you want to go after, then like I guess like the easiest way is to find them on LinkedIn and then like reach out to them and just ask. But like I guess more interestingly, right, and going back to what Gavin mentioned about advice. So we all see mentors as like a source of advice or inspiration. That can come from like a lot of different people you interact with, right? So like Gavin has given me a lot of advice as well. Right, some good, some bad. But I think a lot of times it happens very naturally, right? It's not I don't see it as something that you sort of pursue, like a key metric, right? Like I need to have 3 mentors and these 3 mentors need to be like these sort of like really experienced people. Yeah, does that answer the question?
Yeah. How about you, Mo?
Yeah, I think like what Gordon said, right? Like it's not something you kind of set a target and you're like, hey, I want to XX number of mentors. Or I think almost naturally, one of the good ways we found, I think to find a mentor in this space is just start interning for a startup. At Spenmo we take an incredible number of interns actually. Most of them have never had startup experience. We are the first ever startup experience, and it's a great way to kind of like get into the ecosystem and start working with guys who've been in the scene for a long time. Right? I think it's kind of odd to like message some guy one day and just be like, "Hey, I want you as my mentor." I think that's kind of creepy. I probably wouldn't reply the message, right? But very recently we had like a law student kind of reach out to Spenmo and he was like, "Dude, I've never done startups before, but I kind of like admire Spenmo a lot, and I want to join the team. I want to learn from you." And we took him on, right? So I think that's probably the easiest way to kind of get into the scene and start talking to people in the ecosystem and start learning. So I'll definitely encourage people to kind of like do that. A lot of startups early on, we want to like give students a chance, take a bet on them, right? And give them a good summer opportunity. And I think that's the best way to kind of learn about startups, right? Before you actually go into a summer internship, it can seem a bit scary, right? Everybody's kind of saying, go the corporate path, go to a law firm, go to an IBD, go to consulting. So, definitely take that opportunity to jump into one for a few months if you're given so. And I think it's the best way to find a mentor.
Yeah, I definitely second that, man. I think, it's all about sort of the people that you end up surrounding yourself with, right? And I think that's probably the only thing that you can be deliberate about, right? Aside from being creepy, which I think has been mentioned a few times. But yeah, I think you can choose who you surround yourself with, who you spend your time with, who you give value to, and I think that just naturally leads to the interactions, and I think getting a mentor, I mean, at least from personal experience, it was a very natural thing. It wasn't something that you actively seek out. It's just someone that you just kind of connect with on a deeper level. In fact, it's not even like formal, right? Like, I don't think many people out there formally have that relationship.
Definitely agree with everything that's been said so far. 100% for internships. I'm assuming many people here are SMU students. There's a formal program with the SMU Alumni Club where you can seek mentorship for certain types of mentors and topics. If you want to, you can check that out. Then, aside from the natural and the internship stuff that people have already raised, I think I'm putting myself in the shoes of a student here. And the mindset that you should start with is generally people like to help other people and they're willing to help, but you have to ask in the right way. So if you just ask the person like, hey, do you have 20 minutes for a chat? Do you have time for coffee? That's very unlikely that you'll get a positive response. So if you have read that person's profile well, you know what that person's expertise in, if you have the more specific to ask, the better. And if there's a very specific topic that you want to seek mentorship or advice on, and then I suggest that the best way would be to do some research and then make a very specific ask.
Okay, let's move a little bit into like the fintech kind of questions. So the first question I have would be, I think anybody can answer, but I think it's also directed at Gavin. What opportunities do you see like in the open finance space, particularly in Southeast Asia? Yeah.
Lots of opportunities. That's a question I ask myself almost every day. So open finance is a huge topic. I personally see it as falling within three big buckets. We've got the data aggregation space, we have the open banking payment space or open payment space, and then we have the banking as a service piece, meaning like card issuance APIs, account opening APIs, so on and so forth. And really, if we step outside Singapore, where even in Singapore, a lot of these things are just starting, right? A lot of the famous startups, if you guys follow fintech, like New, Railsbank, they have only started in the last 1.5 years in Singapore in the banking as a service space. Almost nothing is done yet in the data aggregation space. The government has come up with some initiatives, SG Fintech, etc. But if you step outside of Singapore, it's day zero for a lot of these things. So the opportunities are endless, really. And maybe one thing I'll add is it's not a matter of whether it will happen or not. It's a matter of when we will get there. So a lot of these infrastructural pieces will become open. Exactly when, it's anyone's guess.
I see. Cool. Then, yeah, speaking on that, right, like in terms of regulators outside of Southeast Asia, like I also did read up a little bit on like how Indonesia and OJK is like currently doing some implementations as well. And you yourself also is expanding into Indonesia. So how do you see like that kind of regulatory impact your business in a way, and also how do you navigate through that?
I mean, if you ask me, my answer would be a bit biased. I obviously think that the time is right. That's why I'm doing a startup in this space. And what I would say is the regulator support and actions has been very encouraging so far in the recent years. So most regulators across Southeast Asia have come up with very clear open banking or open finance API standards that sets the stage for the conversation. And indeed, there are conversations happening. So the Singapore regulators, Indonesia regulators, Filipino regulators, they have already released very clear API standards. Some of them have already released draft regulations or very clear white papers, including the Philippines and Indonesia regulators. So things are moving, and I would say things are moving fast, especially if you moving fast in terms of a regulator's pace. So in my view, something will happen in the next 2 to 3 years, something significant.
Cool. Yeah.
Thank you, Gavin. And our next question is actually directed more towards the surer. So Gordon, what do you think the future of insurance would look like in Singapore?
Right. So I guess might be a little bit biased as well because that's what we are working on. So for definitely good reasons to believe so. I think before answering that question, right, if you look in the last 5 years, there's been like various trends in insurtech. So like 5 years back, there's this rise of insurance aggregators, right? So players like GoBear, they bring all the different sort of like insurance offerings and products on one platform, and then they try to go direct to the customer, right? And then you've got this set of who we term to be digital insurers. So these are insurance companies who do not leverage a sales force. They go direct to the customer as well, right? Now, I think right now, and I think the future of this would be that there'll be more companies looking at building this digital ecosystem, right, that I mentioned Shura is sort of building for. And it's a bit related to what Gavin mentioned, right, about sort of like a fully connected platform that allows and does not sort of like discriminate on the kinds of business model, the kinds of distribution channel, and the kinds of sort of like players, right, who might be distributing insurance and might be consuming or purchasing insurance. So I think like the rise of digital ecosystem that facilitates this would be the future for insurance. So such digital ecosystems will not discriminate between like whether you're a direct to consumer player or like if you're a B2B player or if you have a B2B2C model, right? So essentially you thrive on being an open infrastructure that allows insurance companies to find more distribution channels, more ways to share about their products. You're allowing distributors like agents, that would be the traditional ones, right? Intermediaries, to access these products, to offer it to the end customer. And then the interesting one would be that with such an infrastructure, you're also allowing non-traditional players to take part, right? So what I mean by this would be, right, if you think about it, like Apple Care is sort of like insurance, right? You purchase an Apple product and then you add on like $200 and then they say like whatever happens, right, I'll fix it. But imagine how powerful it is, right, for any sort of like company out there or any merchant out there who wants to create their own Apple Care but might not have the financial muscle, right, to do so. So I guess like an example could be, imagine Prism TV, right? Like they're selling televisions. Instead of offering warranties and stuff, can they dip into this infrastructure or ecosystem, customize a product that's already on offer, and then package it in with the product that they are selling, and then getting their customers to, if they want to get an add-on. So the benefits, these benefits like multiple parties, right, in this entire sort of insurance industry and also for the policy holders to have the option, right, of purchasing something that is directly related to the product that they've bought. I guess we've seen like various examples of how this is happening right now as well. So like with the partners that we are working with or integrating with, One of them would be a digital insurer who has no sales force. They've shared with us that they've had these hypotheses that there are certain product lines that they find hard to distribute direct to the customer, right? Just because it's too complex. So more related to commercial related insurance, like for businesses and stuff like that, it's too complex for someone to be able to grasp, a layman, right, and then click on that button to purchase directly. So they had these hypotheses that they need sort of like a physical sales force, leverage on that. They tested it out with one agency, and they saw like an immediate uptake. But they then had a new problem, right? How do I scale, like connecting with like the different sort of like physical distributors, right? Being your intermediaries. And that was how the conversation started with us and this insurer working together. Yeah, and obviously it'll be even more interesting for them if they can offer this product via, like I mentioned, right, a merchant who sells like any product out there. Yep.
Oh, yeah. Okay. So yeah, we have a question in the chat. So anyway, if anybody wants to put in the questions, you can just feel free to put in the chat and we will answer them accordingly. So Wesley kind of asked a question that also kind of lead up to what we want to ask. So since we have both Aspire and Spenmo here, who have kind of have overlapping businesses in some way or rather. So this question will open to both Joe and Mo, that how do you guys you know differentiate yourselves from competitors and stay unique in a way also to drive value to your customers?
All right, should I go first, Joel?
Go for
I'll give
it.
it a shot first.
Go for it. Go for it.
Yeah, I think that's a tough question, right? I think, for us, if you kind of look at the legacy of like CFO software, I think it's been on the rise only in the last decade or so. And I think in Spenmo's mind, right, the evolution of the CFO suite is kind of predictable if you kind of look at what happens in the US. The first thing that's kind of gone to the cloud or kind of been digitized has been accounting software. So companies are shifting their books from like pen and paper to the cloud. The next stage of evolution, the CFO suite of services, once your accounting is in the cloud, the next one that we're kind of seeing in Southeast Asia broadly has been like payment gateways and receivables, right? When your books are basically in the cloud, you want to be able to kind of receive money from your customers digitally, right? And there's a proliferation of like payment gateways and receivable companies now in Southeast Asia. And then the next set where Spenmo kind of plays in is bringing your payables into the cloud, right? That's the next evolution of like the CFO suite. So I think in our mind, like, we don't really compete with legacy software so much because nobody's kind of built this category of like payable software in like Southeast Asia. So it's our job to kind of like create this category, define what it means, what does value mean to like a CFO and a finance team when you're trying to bring your payables into the cloud. And I think there'll be like another stage of evolution of the CFO suite that comes even after Spenmo, right? When you're accounting, your receivables, your payables are in the cloud, when all these three things are digitized, then you can go and bring analytics, right? Your FP&A into the cloud, right? And you see some hints of this already in the US, but I think it will take a couple more years for it to kind of come to Southeast Asia, right? So I think that's the way we kind of see it, and at least Spenmo's evolution. And I think Joel will have his own story on how he kind of competes with legacy players in this space.
Yeah, very cool. I think, when we think about competing in general, right? I think it's very much who your audience is, right? So I think, Mo very correctly sort of outlined, I think where Spenmo's really nice sweet spot is, it's kind of larger companies with, have to sort of manage a large team of employees, and you manage your spend, your payrolls, etc. For us, we kind of maybe find and maybe Wesley was correct to point out that our competition is maybe slightly more on the banking side of things, at least for a start, right? Because I think when you are a new business, right, or a new startup, the first thing you're going to do after you register your company is to basically open a bank account. And that's for us sort of that's where we entered, right? And that's kind of our flagship product. So we built up this business account, and I think Wesley is very right to ask, how are we going to compete in the future, right? You have all these digibanks coming up, kind of going to provide a digital first experience that maybe the banks are not so on par with, especially with serving businesses today. So the way we look at it is actually we kind of want to build with the growth of these new businesses, and we kind of want to support them in their journey, right? maybe a little clever in the sense to say it this way, but kind of as we are growing as a company, we're also building, and with limited resources, we also need to decide what to build at which stage. And yeah, basically the end vision for us is basically to provide everything that a business needs in terms of finance, right? But obviously the reality is that you have to build that a step at a time. But yeah, the average business, whether you know it or not, they actually use 7 different financial service providers, right? You have a bank, then you have maybe a HR software to manage your payroll. You have maybe use someone for FX, and then you have Xero for accounting, etc., right? And today our view is that all these systems are disparate; they don't talk to each other, and obviously there are ways there are benefits to kind of come in and kind of be that Apple of financial services, right? Where your collective usage of all these different products actually adds to a greater whole, and that's kind of our vision.
All right, thank you, Joe and Mo. So our next question is actually it's an open question. So when you are starting out in your respective fields with the limited resources you had, so how do you actually compete against larger and more established competitors? And also, what kind of street smart tactics have you guys tried and worked? So, so Gordon, would you like to try?
Yeah, I'd like to try because I'm leaving that right now. We're still really small, right? Like compared to the guys on the console like Brig and Aspire and Spenmo. So cut me some slack, guys. Anyways, I guess like the one thing that we try, I mean, it's obvious to say, right? Like play to your strength, but like we always knew that our strength, especially in the insurance industry where you've got players who are rather held back with legacy systems, right? The advantage that we have would be being nimble. So it's cliche like this whole like move fast and break things, but that's something that we in our team, right, we really subscribe to. So the one sort of strength that we know we have over like some of these bigger companies would be being able to be nimble, reacting to opportunities, iterating on our product, all the way to like even like marketing tactics, right? So I guess when you're a small company, like failure isn't as sort of or like failing in trying out something isn't as huge, right? You're not placed under a microscope, so you're allowed that little bit of leeway to fail a little bit more. But the important thing is to learn from it. So then, with that sort of advantage in, I guess like with that in mind, right? We try to be really fast in what we do, and then we just learn from anything that we break along the way, and not do it again. Yeah.
Anybody want to
I mean,
comment?
I really second Gordon's thinking. So speed is the most important thing. Speed of execution, and then once you execute that, really you learn. So the speed of learning, and then speed of pivoting also. So it's very unlikely that you get it right on your first try. But if you try enough times, eventually you will get it right. And speed is your best friend here. When we are 10 people, you move. I wouldn't say even 10 people, you move more than 100 times faster than a 1,000 man company. So that's the biggest advantage we have.
I can go next. I think Gordon and Gavin have kind of like espoused the value of speed. I think one of the things that you as a nimble startup you can kind of like have a huge advantage against a big enterprise is being very intentional about your customer segment, right? As an enterprise, you have to go after a large swath of your market. You start serving, you start serving from like 50 enterprises. You suddenly have like a few thousand customers in the enterprise, and very quickly that focus dilutes, right? Like you have a huge base of customers, but you're not really building for like a particular segment, right? And I think that's your edge as a startup. You can really pick, for example, instead of just focusing, say we're going to build something for SMB, you can say I'm only going to build for like FMB startups that have between like $2 to $10 million revenue, and they have like single man shops, right? So, and then if there's a problem there, and you can really focus and build a good problem, a good solution set for like that particular segment, you have a chance to really win against a big company. because those guys won't be able to kind of focus on a small segment of the market that requires, customization.
Took the words out of my mouth, man. But totally agree. Maybe just coming from a bit of like a e-com experience and then my foray into fintech, right? I think, e-com, when you first start, generally you kind of already are stuck in a certain segment, right? So when started working on fintech, you realize like how huge this market really is, because every single business needs it, right? Every single consumer needs some sort of, you have that opportunity, and that's really where, like I think what Mo said, the opportunity is to home in on a clear target segment. And for me, I chanced upon this phrase long time ago. I'm not sure who said it, right? But this person basically said, like, you will never be wasting time by trying to go deeper to understand your audience. And I think that has rung true to me to this day. That's something that we constantly do, and I would encourage a lot of founders to do, because I think that when you couple with speed, probably really competitive advantage.
Yeah, totally agree. I think listening is a really good skill that a lot of people don't really use it very well. Yeah. So we have a question from Clarence, saying that, what are your thoughts on the trend of previously non-finance related companies dipping their toes into like a financial stack and like building their own financial solutions? So for example, Tesla right now has their own insurance, or like Angeli stack with their own spend management feature for startups. I think it's something of what like Gordon touched on earlier with, or Gavin, sorry, with Grab. Yeah.
Yeah, so like I can go right on like the example of like Tesla and their own insurance. I think it's a little bit going back to that whole point of being inclusive, right, of non-traditional players being able to package insurance for the products that they sell. But insurance is one thing where you need sort of like a lot of financial muscle and power, right, to be able to, not everyone can be an insurer essentially, which is why you're hearing like names like your Amazon and your Tesla, and obviously it's good business insurance companies. They've been around for the longest time, big bucks. And it's interesting what Mo and Joel said earlier, right, about customer segments. So there are a lot of businesses out there that we've seen, right, in the market that would want to allow their customers to purchase insurance, but obviously do not have like the muscle of like a Tesla or an Amazon to create their own, right? So then when you fully understand like this customer segment, then you'll be able to cater for solving this problem or providing for this need. So how we stumbled, and like a lot of it is also through learning, right? So how we stumble upon like how SMEs, they have this one to package insurance with their product was from the starting problem statement that we like, so in pitches to our investors and all that, we always said, right, like in Singapore 70% of SMEs are underinsured. So we started thinking SMEs, right, they do not have enough insurance that to cover their business, such that if something catastrophic happens that they don't go under. So we started speaking to more users, right, in the SME space. And then in these conversations, then they were the ones who started throwing out these ideas as well. And they always gave like your Amazon and your Tesla and your Apple as an example of, wow, these guys, they are doing insurance also. Like how like, wow, it would be awesome if, if I can offer such as well, right, to my customers, so I'm not liable for a lot of the like unfortunate stuff that might happen when someone purchase my product. So yeah, so that point on like Tesla and insurance, so the thinking is that like there are always gonna be like companies with the muscle who would wanna come into this space. Is lucrative, but then there also exists a segment, right, who would probably need support instead of doing it on their own. Yep.
I can go next. I think it's a great question. I think it's, if you kind of look at the profile companies who's kind of listed in the chat, both, all these companies that MBFIs, they're trying to go into the financial stack of their own, they're all publicly listed companies. So you can almost think of it as like a corp dev M&A team that's trying to increase market cap of the company that's being listed, right? And after you kind of like, you've done everything in your core market for your core product offering, introducing financial services into the mix basically increases your market cap significantly. So what they're trying to do is basically just boost the share price, right? That's the job of a corp dev M&A team, right? But obviously, one of the things that you can solve if you have like a huge latent base, like a user base, and you have distribution, is that you can solve these two things easily, right? The question kind of becomes is that, if you're trying to think of a startup that competes against Amazon, right? Make sure it's not the same exact product, right? Because again, like Amazon will kill you on like distribution. They have like a huge user base. There needs to be something that your startup can kind of compete against, right? Without leveraging the distribution that a big guy has. So make sure there's not the same product. And I think one of the things that people always miss is that sometimes being a bigger company is not always advantageous. You move slowly, it takes a longer time to make a decision. And just because you have a product as part of one of the 100 suite of products that you have, doesn't mean you have focus on it, right? So don't underestimate a startup that is doing that one module out of the 100 modules that a super app is doing and just focusing on it, right? Because focus is key. Like you go deeper into the product build, you go deeper into product quality, you can really focus on solving the problem instead of just one app in a module, right? So we kind of saw this at Grab, right? They have a great super app in theory. There's all this like cross synergies of cross sell, upsell, and all these things that should happen. But again, like if certain things are not built to the level of like a standalone unit, people are going to use the standalone unit at some point in time.
Yeah, I think a lot has already been said. The trend is definitely there. This embedded finance, embedded financial solutions trend. So it's definitely going to be a thing. Maybe I think something that the question might be angling at, but not really stated is, will these guys be competitors? Very often, these NBFI companies are just the skin on top, and somebody, a traditional bank, traditional financial institution, is still providing the infrastructure. And in the US, I read some research where out of every $4 earned, $3 is still being earned by the bank. So your banks are not dying, not going away. They're just focusing on the supply side of things and the infrastructure piece. They're still powering your favorite financial services.
Yeah, I think that there are lots of models, right? You have Brick, of course, right? And then, you have other folks who try to take that full suite kind of banking as a service model, right? And then you have obviously people at the top that are just putting a skin on it. I think I think it's going to be there, right? The world is so big. Every company has its own strategy. Some people view it as a monetization strategy. Others view it as a, engagement strategy. It's going to me, it's probably, company by company basis. It's going to be there. The world is big enough for that.
Yeah, sorry, just for clarity, what does NBFI mean?
Non-bank financial institution.
Oh, okay, I see.
Yeah.
All right.
Yeah.
Thank you guys. So our next question is actually from one of our participants. It's from Clarence. Sorry. It's from Tan Kin Ming. Sorry about that. So the question is actually like, given how data science has advanced over the years, is it something that your startups are still using to have an edge over the other businesses? And I would actually like to add on and asking like, apart from data science, would RPA, robotic process automation and AI, would they play a very disruptive parts in startups to give you guys an edge over other of your competitors?
I can go first. I think, at Spenmo, we do invest heavily in data science. It's a very important function for us. But I don't think it's so much as like giving advantage over other businesses. I think it's just giving more insights into our customers. I think just how they use the product, what else they want to see. That's incredibly critical for us as we kind of build from first principles and trying to figure out like what's next in the product roadmap, how else can the product be improved, right? That product analytics and data science on that elements are going to be super useful for us. And I think it's a view, especially for us, we're a B2B company, right? We serve corporates, it's not something that you have a large data set compared to a B2C company where, very early on you could have like 100,000 users, right? You have a less, the sample size is smaller. So you really want to go deeper in each of these corporates, right? Understand their workflow, understand how you can help them. So I think that's where we want to see a lot more data science being leveraged and to kind of build a better customer experience.
I'll give the controversial opinion. I think data science, ML, AI is overhyped, especially for startups. Simple algorithms, if then logics will work a lot better, 99% of the time, until you get to very significant scale. Somebody who can leverage data science, ML well is guys like TikTok, Facebook level guys. They really need it.
Yeah, it's just like to add on to that point, right? I didn't have like the courage to sort of talk about this unpopular sort of opinion, but since you mentioned, like the truth is, so we are at early stages of building this business. We understand like the importance of understanding like what the customers of Surer are doing. But the truth is that like building out like that data analytics side of things has always been something that we knew we needed, but haven't prioritized. I guess if the context is that like at the start, it is important, right? Like to have insights in your business, but also I guess like 40% gut feel on how you want to move. Because I've had previous experience, right, in prior companies where like analysis paralysis, right? So much data, everyone's like going to the data team using Looker. I'm asking for like every way I could slice a data set. Everyone would have their own interpretation and recommendations based on that set of data, and then like nothing gets done. Someone would just walk in and say, no, I feel like the business should be so and so, and like we just do it. So I guess a little bit controversial, right? Like from a personal experience, and at like Surer's stage, like we don't sort of leverage data science that much, but of course it's something like important to look at, right? For the purpose of understanding how people are using your platform. Yeah.
A super nice and honest insight, right? I think it's quite true that maybe until you reach a certain level of scale or sophistication, maybe it's not something that gives you a competitive edge, right? But for me, I do understand what Gordon means, kind of startups when you're first trying stuff out, super early stage, you have to go a bit gut feel, you make that bet, and then maybe it's about how fast you kind of reach the conclusion of your hypothesis, right? And then move on, right? So yeah, I definitely have, sort of wasted my time A/B testing early on in the early days when it doesn't really, make sense or add value. At the same time, I think data is still very important, right? Using it to guide your business decisions, right? I think it's still key, and I think the edge is kind of like how you use it, right? Like what perspective can you get from it? And I think maybe here's where founders or startups really have that edge against big companies, right? The way you slice it, or the way you think, the way you approach market and market fit. That's the real skill set, I think, and using that data is maybe that differentiation. Data itself is probably hygiene in this day and age, I think.
Maybe also tapping on the point of like collecting data. What are like your views and takes on like user data privacy and stuff like that?
Maybe I can go first. I mean, I think we collect a lot of data, right? And I think maybe one of the I think it's really important to value data privacy, and I feel that at least in Singapore, right, the government has set out really clear guidelines that makes it that it forces businesses to adhere. And from a personal consumer point of view, I'm really happy that exists, right? And then from a business point of view, it's something that we know we have to do. And I think it's great that at least we have an enforcing body that has set out those guidelines.
I see. Okay, yeah. Okay, let's move on to something a little bit more interesting. So, yeah, Gavin and Gordon, you guys are from Antler, and then Joe and Mo, you guys came from YC. So, I just have one question for you guys. Is it worth it?
It is.
Well, for me, it was worth it because I got to meet Gavin. That was the only thing I got out of. No. Right, no, yeah, I'll just share my experience. So Antler, the one thing that stood out for me, what we learned, a lot of people talk about like the network they open you up to, especially like with investors, the branding that you get out of it once you've graduated from the cohort. I don't think any of those are as important as how if you have a good mentor, how they are able to help you crystallize your business, right? So there's a lot of conversation, right, from Mo, Gavin, and Joe around how you should really as like in the early stages, right, really understand what you want to do and like be good at doing like that one thing, right? When we first joined Antler, it took me 3 hours, right, to pitch what Surer was about, right? Like Winnie from Antler almost killed me, right? They were able to help us crystallize, draw out like sort of the gist of what we wanted to do, and that has like very important trickle down effect, right? All the way down to like how you would write your press release, right? Like 10 pages to describe like what you're doing, all the way down to like just like your standard release with 700 words. So I think that was the thing that stood out for me, like just going through like many times of sharing your business, your idea, having people telling you, you know what, like you should focus on certain thing, and then from there you crystallize what you actually want to do with like these like 10 million ideas you have. Joe mentioned a few times as well, like the fintech space or financial space is huge, right? It's the same for insurance, it's huge. There's like 3 million things you can do. But what do you exactly want to do and how do you want to serve that specific sort of market? That's what I got out of Antler, like the one thing that stood out for me.
What about Gavin before we move on to YC?
I mean, we should let the YC guys talk. That's the interesting one. But I think it's as a first-time founder. If you are a first-time founder, it's super helpful because I mean, to be honest, you don't know anything about running a business. There's so many aspects of a business: how to hire, how to fundraise, how to pitch, so many things. So that's helpful. But those things you can learn on the internet, talk to your friends, you can do YC Startup School. There's already so many good courses out there. What you really walk away with is a community of strong founders, whatever accelerator you're in. So, I mean, any difficulties you're facing, some other founder has faced it before. You just ping inside your Slack group or that community, you can get some answers quickly. Whether it's Slack for Antler or, YC has their equivalent of Bookface. I'll let them talk about it.
Thanks, Gavin. I can go next. I think a lot of people kind of misunderstand why we went through YC. I think when me and Isak, my co-founder, when we started the company, we didn't even think about YC at all. We were like, let's try to build this business. I think by the time when we started the company in 2019, there was not that many Southeast Asia companies that actually went to YC. So we never applied just because we thought like there's no chance we'll ever get in. And I think last year we did, we launched the product in like Jan in Singapore. And then obviously after that, COVID hit, right? And then, VC funding just kind of disappeared. It's not like what it was this year. So me and Isak were just, we were just trying to survive. And we were like, where's probably the only place where we could get the next check from, right? And accelerators were still giving out money. So, me and Isak, we applied. We were like 3 weeks late, but somehow we managed to get in and we got that 150K. So, you do what you can to survive, right? And then, obviously the experience after that has been like phenomenal, right? I didn't expect to be so much value add. They take away 7% of equity, but I think it's definitely well worth it, right? I'm a first-time founder, so to me it was learning the ropes of like how you actually run a business, and also just like being in the pressure cooker with like other founders week in week out during the 12 weeks. Everybody who gets in is like hyper competitive. They're really smart guys, and when they put you together in your section where you're just talking about progress week on week, you feel that immense pressure to kind of like just keep up with it, right? Like it's always said, like the best YC companies during start of the batch to demo day, they grow 5 to 7% week on week, and just to have that accountability, week in week out with other founders who are also growing massively, it just forces you to kind of think of like, okay, where's the next part of growth going to come from, right? It's not something you kind of put off to next quarter, right? You know that one of the group partners we had was Michael Sable, right? He was a legend. And I thought he'd be our group partner. And to kind of go to him every week and not be able to kind of show that we grew 7% was very stressful. I was like, shit, we got to find a way to grow. So we just made it happen, right? But I thought it was a good experience. Like, I learned a lot, met a lot of cool people. And I think most important for Southeast Asia startup was access to like US capital. I think that was definitely very, very useful to us.
Yep, everything Mo said. But I think maybe the only thing that I would add is maybe just one word, right? Which is mindset. And for me, that's maybe the one differentiating factor that I see people have gone through these accelerator programs have, right? And I think if you're a founder, be it whether you're doing it from right out of school like I did, right? Didn't know any better. Or whether you've gone through the entire corporate experience and then decided to come out and do something yourself. I think being a founder versus being everyone else is very, very different. And I think the thing that founders have is really this mindset of like of being super receptive to feedback, super kind of you're trying to do experiment after experiment as fast as possible. And you're just constantly challenging that status quo, right? And I think like Mo said, when you're in that environment with all these other top-notch minds around you, that pressure cooker environment of having to deliver week on week, you just learn that mindset, right? And that's, I think, what eventually after your iteration after iteration is going to differentiate you from maybe all the other startups out there. So yeah, definitely recommend going to top accelerators.
That's good to hear. Yeah, Arun, you have a question.
Yeah. Thank you all for your responses. So my next question is regarding when you're like actually starting out your entrepreneurship journey. How important is how important is it to find like-minded individuals in your journey, and how do you go about finding people who share the same vision as you guys?
I can break the trend here so Gordon doesn't have to go first again. I think like the initial team is super important, right? It's probably the most important recipe or ingredients for success. And I think a lot of it is just networking, like trying to be in like founder communities or like soon to be founder communities. And, obviously being at a place like Grab definitely helped, right? Grab, Gojek now, Lazada, these are basically like all the places where, ex-Lazada, Grab, Gojek guys are all thinking of starting new things. So I think being close to that kind of community definitely helps, because most likely your co-founder or early team is going to be from those kind of places, right? And I think number one for me, like the most important thing about finding a co-founder is that they should share the same vision from you, but they should have like inherently different skill sets, right? So it worries me when I kind of see a team with like, 2 consultants or 2 business guys trying to go into a startup. That to me is worrying, right? Especially if the product is going to be like fairly tech heavy. You want to have a team that covers your weaknesses and your gaps, right? That's the most important thing. And that requires a lot of self-reflection and looking in and understanding, okay, I'm good in these things. Which are the things that I really suck at or I have like no clue, right? Which are the things I need to pad up? And you almost want to like narrow your search to those things that you want to pad up, right? That's basically what makes a good team, especially for a co-founding team.
Yeah, totally agree, right? I think like the whole point of identifying your own skill sets and then identifying what would be critical skill sets that you do not have, and then starting from there, looking for someone who might have those skill sets, that's important. But I think equally important would also be someone, so not only vision on the business, right, but someone who shares your sort of like principles and your values, right, on how you tackle a particular situation, or how you treat a particular challenge that you face. because you'd be facing like tons of challenge. So skill set is one thing, but like I think principles, values, identifying that in like a prospective co-founder is super important as well. Because like you realize sometimes a lot of times like you might be saying the same thing, right? But like someone might be putting it across differently, and you go in like a circular argument. So yeah, I think like that aspect of things super important as well.
Yeah, I think a lot has been said about co-founders already. And in addition to that, I would say the first 20 people are super important. They set the culture and the tone for your organization also. And yeah, should ideally share the vision. And there's really not much else for me to add. Mohan and Gordon already covered most of it.
I see. Cool. Yeah. So yeah, there was actually a question similar to this also. Like, how do you go from 3 to 20? You guys have answered that. So maybe beyond 20, like to 50, or like any thoughts on how do you like want to channel your inner strength to fake it till you make it?
I mean, the only guys here above 50 are Joe and Mohan, right? So why don't you guys go?
I think I can go first. Honestly, like I think the advice would be to kind of stay as lean as possible as you can. I think there's tremendous value in that. Like what Gavin said, the first 20 people are super important. But also caveating that is that if you're like a first-time founder, and you haven't raised a lot of money, and your product is like kind of new in the market, you cannot be too picky about the guys who's going to join you, right? Because you don't have all the time. You can't wait for six. You're not like a Google or Facebook. They can put a roll up and wait for 6 months for it to be filled, right? You got to get shit done as well, which means that you kind of basically get your army of people, your first 20 guys in, and just try to band it together, right? And hopefully you keep the hiring bar really, really high. But it's not going to be like a guy from like Google who joins you on day one, right? Or a senior guy who joins you. It's almost a different kind of profile, right? And I think it's kind of like there's different kind of people who will join you from like pre-seed to seed, and then from seed to Series A, and then the Series A plus guys, and like Joel's at Series B. Like the guys are different. So the nature of the guys I'm seeing and the guys we're kind of adding in the team is different, right? The only thing that kind of binds them together is like the vision, the product that we're building, the desire to become like a really, really big company. And I think one of the things that we still do at Spenmo is making sure that like every, basically whatever role in which plays junior, mid-level, senior, it kind of goes through like one of the co-founders, right? Because you want to make sure that on paper, like everybody says the right skill set. Like by the time it comes to me, it's the right skill set. Question kind of becomes whether you have the right culture fit, right? Going to thrive well at a Spenmo, right? That becomes very important, which to me is like a very important part of it. Because if you start adding a few people into the mix, imagine you're still 50 people, right? Every single person that you kind of add on is still like 2% of your company. That's still a large chunk. And if you get the 50 plus people hire wrong, right, you will find that the average talent density at your company will start going down over time. And that becomes bad for like business, right? You start shipping slower. The early guys who joined were like high potential and they're like, they're workhorses. They want to work with other high quality people. So as a founder, like your job is to make sure that you can be the magnet for talent, keep the talent bar high. But obviously one of the challenges against that is that now we have to hire quickly, right? Spenmo now, compared to a year ago, we have to hire much more quickly, which means that I can't wait on the trigger and say like, okay, I'm going to wait 2 more months until I find really the right guy. So I think that's always a tricky bar, right? You want to keep the talent bar high, but not keep a role open for 6 months as well at the same time.
Yeah, totally. There's this quote someone said recently that your first 20 employees are angel investors. I think that's super true. And I think Mo said it very well. Hiring at each stage of a company is very different. The people who are willing to step up at that stage versus the resources that you have and the talent that you're able to grab. But I mean, for me, maybe just sharing reflections, right? I think hiring is number one hardest thing I've done, right? You have hits and you have misses, and it's super hard to even go back and identify why it was a hit or why it was a miss is super hard. And yeah, I mean, it's something that I'm still learning as we go along, right? So, putting lots of processes in place, reading up lots of different books of people who have done it before. But for sure, this is one of those things when like you're a founder, yeah, you just kind of have to, put on the shirt and get it done. Even though you have zero training, you don't know what you're doing, but you just do it. And yeah, like Mo said, I think keeping the bar high is super important, right? You cannot build in silo, and you are basically building at the speed or at the quality of your team. And as a founder, it's your responsibility to keep that bar high.
I see. Okay, maybe let's tweak the lens a little bit, and maybe yeah, I did a little bit of digging and I realized that you have actually angel invested in some companies. So actually, what made you decide to take the other hat and invest and in a way pay it forward to the other companies, and what uniqueness do you see about them? Yeah.
It seems like you've really done some stalking on my LinkedIn. It's good. But hey, I think the caveat is that, it's nice to have other people send you investor updates than just me sending to my set of investors. And, obviously, like as a founder, like, 99% of your efforts and your wealth and everything is in the startup that you create, right? But at the same time, you want to like be able to kind of spread some of those seeds, right? To like other companies that could be interesting. And I think it just kind of got to me like when I went to YC, like when we did our demo day, there's so many like other founders from previous batches that were open to kind of angel investing and giving us a check. And like those seem to be like actually some of the more useful checks investors that we have on the cap table, right? So money-wise, obviously not the largest, but taking an angel check from a founder, some of the founders on the cap table have been immensely helpful because they actually know what the journey is like. They can, especially if they're very close to you in terms of the journey, right? If some guy exited a startup like 20 years ago, less useful, still can be useful to you. But like when we were like seed stage, taking a check from a Series A, Series B founder was immensely helpful because they could give us help on the recent Series A that we closed, right? All those things were pretty recent, and they can actually say like, oh, I did this, I didn't do this, you should have done this, right? Those kind of advice was good. And I just thought like, for the next set of companies, like I could be useful as well. And I was just keen to kind of like understand different kind of profiles of businesses as well, right? So if you kind of look at my LinkedIn, I've kind of invested in like e-commerce, a couple of health tech startups, a couple of fintech SaaS, obviously, which is like a bit more like my core. But also just I think one of the things that happens as a founder, you only think very quickly because you spend so much time in the space that this is the only space that matters, which is terribly wrong, right? So, angel investing and like getting investor updates and talking to founders from like totally different spaces is just a way to kind of like keep your developments, right? What is happening in LATAM, what's happening in India, like what's interesting in like the insurtech space in India, right? All those things are interesting because again, when you bounce off ideas to someone from a totally different space, there's certain distribution strategies or certain go-to-market strategies that could also make sense for your business. So there's always that cross-pollination that could happen. I think another question that I kind of saw was, basically like what did I look for early on, like in an angel investment? Honestly, there's not much, right? Like this is kind of like Spenmo 2 years ago. I'm really not sure like what our early investors saw in me or saw in Spenmo. But now, kind of like shifting lens to like a bit more of the investor side, honestly, the only things I look for is like, is there a big enough market that these guys are going for? And are these the right guys with the right profile and mindset to tackle this problem, right? Those are the only two things that matter, right? Like no point looking at Excel projections, financial model projections, right? Those things don't matter at like seed stage typically when like I'm investing at YC demo day, they're like $10 to $20 million below and we're like basically the first check in. Right. So those things don't matter. It's just like kind of looking at the profile and like almost having a gut sense of like, does this guy have the grit to kind of grind out, make it happen? And is the TAM large enough for it to become a big business, right? So I think that's the only things that matter. And I think I kind of like shifted lenses as well. I was going back to my time and thinking about like when we were trying to do the angel round or the seed round, what kind of investors did I hate? So I hated investors, like early on when Spenmo was like pre-product and pre-revenue. They were like, hey, Mohandass, like, show me what's the pathway to 100 million ARR. Like, show me your forecast. And I'm like, dude, that doesn't even matter now, right? Like, I can put together an Excel sheet with that numbers, right? I was a consultant if I can do it, but it's like absolutely useless for you and it's absolutely useless for me. So, I think that lessons that I hated on the other side of, investors that I didn't like, I made sure that I didn't become those guys, right? So I want to be the guy who said like, hey, why do you want to do this? Solve this problem? What's important to you? Like, what have you seen, right? What do your early customers like you? Like, those are the questions that you should be asking. I think that's what I kind of go for when I do these angel investments.
I see. Anybody else who tends to do angel in the next time, or like, because it's like kind of an interesting space, I feel. Yeah. Like how founders recently, there's a lot of on the news that they are getting to the other side. Yeah.
Yeah, I think it's quite
think
good, right? Because like I think as the ecosystem has kind of grown, right? You have this first gen of founders who have kind of made it. And I think when you're an entrepreneur, you really understand that journey. And then it's really nice to see, entrepreneurs kind of give back and grow that ecosystem.
a lot of founders out there actually angel invest. I think they might not list it. So, and also the VC funds are encouraging it. They are coming up with scout funds and all that. So all the Gen 1 founders in Singapore, like the Carousel founders, Shure, etc., they angel invest also, and they're scouts for certain VC funds.
Yeah, like on that point of like paying it forward, right? I always remember this like conversation I had with Sure, right, before I left Carousel, and then he was like, if ever, right, you're gonna make it with your startup and all that, don't forget to like pay it forward, right? Because like even right now, in our journey, we've received altruistic help, right? Sometimes like you start thinking like, why is this person like advising me or giving me sort of like his time, teaching me stuff, but it's really a lot of like just paying it forward because someone has benefited from something like this as well. Yeah.
All right, thank you guys for your responses. So our next set of question is mainly geared towards like advising our fellow viewers, like fellow undergraduates. So as a student who's about to graduate, should I start my career in an established and large company, or should I, take the leap of faith and start my career in a startup?
Right, I guess I'll go just to kick things off, right? So I started my career in a sizable enough, like, so it's a media corporation like company in Singapore, right? Established, have like a lot of fixed processes, governance, getting things done were a little bit cumbersome. But like I appreciate like my time there and starting there. Although I didn't really exactly like all the various red tapes, right, of a bigger corporation. I say that because then after that, joining Property Guru when it was growing, joining Carousel when it was growing, you then learn to appreciate like the sense of empowerment, right, and flexibility that joining a startup offers. So like the question is like, would you advise like joining a startup first, or I guess an established company? It's there's no like right or wrong, right? The important thing is that like whatever sort of choice you make sure that you learn something out of it. If I were to be biased, I'd say that it's a lot more fun to be in a startup. I'm sure it's pretty fun. So if you guys wanna sort of like intern, if you're looking, yeah.
I can go next. I think, I think it really comes down to personality, right? And like what you want to learn. I don't think there's any inherent disadvantage of like starting out in a corporate environment, right? Like, I did consulting at like BCG, like as corporate as you can get, suit and tie kind of deal. And, if I had to like go back in time, would I straight away go into like a startup? Probably not. I think there were certain things that I learned there that were incredibly useful to like Spenmo as well, which is just kind of like organization, the ability kind of like craft a storyline, craft a pitch, organizing things, being on the ball. Those are things that I kind of learned from BCG. So I think that structure was useful for me. But maybe certain guys who graduate from school, they already have that, right? So they just want to like dive head into a startup. And I think both those pathways are like viable, right? I don't think there's any right answer of like you need to spend 3 years in like this environment before you can thrive at a startup, right? It really comes to our individual skill sets. Certain guys, I think one of the things that I've kind of learned in like recruiting and like doing so many interviews is that age is actually like a very bad barometer for like how successful someone will be, right? The certain guys who have been like really young on our team, they just come with immense experiences. They've been doing so much since they were young, right? They've been like starting business on the side since they were in JC, like all those things, right? Which means that they don't take a traditional path to like entrepreneurship, and you can't just look at the age or like, oh, this is just a recent grad, or they need to do like a couple of years at somewhere else before they're viable for a startup. So I think open question for like anybody is like, if you want to do a startup, do it. If you feel like you need to learn something somewhere else, like it's probably the right move for you to go and do it on your own way.
Yeah, I guess it's really what you want at the end of the day. But yeah, it's really what you want at the end of the day. So at startups, it's unlikely you'll get rich. If it's stability that you're looking for, then maybe not so much startups. But yeah, I'm biased. Startups are more exciting. You get to do different things, hopefully every day, if not every week, definitely. I'm sure most people here would agree with me. Yeah, that's just my additional pepper and salt on top of the comments.
Yeah, I'm probably the least qualified person to speak on this because I've never had other experience. But I've definitely worked with other people who have different experiences. And I mean, unfortunately, the answer is very PC, right? There's no right or wrong. But each of them are very distinct. So I think hard about what you want to get, right? Because that corporate experience, you're probably going to understand a lot more about, corporate structure, a lot more processes. You get to see the potential downsides of a large organization, right? A startup, you might see the opposite, right? You might not see enough processes. It might be very scrappy. And depending on which startup you go to, right, that experience will vary very significantly because the DNA at the start is very different, right? It's very much founder-led. You could have a completely different experience from your friend starting at another startup, right? And then if you want to run something on your own, you definitely learn a lot of lessons there as well. I always call it my very expensive MBA, right? But yeah, the experiences of all three are very different. Think about what works and best for you and what you want to learn at that point of time, and go to it.
Cool. Okay. Yeah. So if 100% is like the total, right? How much percentage do you guys attribute luck to where you guys are currently at right now? I mean, you guys mentioned
99.99%. I mean, for startup guys, it's luck plays a huge factor. Yeah, but I mean, the cliche about luck is when preparation meets opportunity, right? And but yeah, a lot of it is timing. If you have the best idea, like Kindle, somebody invented Kindle before Amazon did Kindle. So many of these things, somebody did it before. They just did it at the right timing. Maybe technology wasn't right, market timing wasn't right, investors were not excited at that time. All this is luck. Maybe COVID hit and then you just had to shut shop. That's luck.
Yeah. Oh, sorry, Joe, you want to go first?
Go ahead, man. Go ahead.
Oh, no, I guess luck is like there's a lot of way to interpret it, right? But like one thing that I always believe in is that like you cannot stop trying, and then if you try enough, then I guess luck finds you, right? As opposed to like just sitting alone in a corner not doing anything, then nothing is ever gonna happen. So like if you're doing it a lot of times, then do you actually, when something happens or something hits for you, right, do you attribute it to luck or not? I don't know. But I guess like an extension to this question would be that don't be afraid to try, right? Especially if I were to think back, when I first graduated, it was like the safe route, right? I joined like stable company and all that, and I was never sort of like exposed to like all this fun and excitement to like took that leap of faith, join a smaller company, and then that's where things start happening, right? Because you're exposed to that environment. So yeah, I don't think like you'll be able to attribute like any one thing to any sort of like how many percent or whatever, right? But like you create opportunities for yourself if you don't stop trying. Yeah.
Yeah, that I wonder if there are any Naval fans in the house. But you know, he has this amazing perspective about luck, right? And actually there are different types of luck, right? So there's blind luck, which is the luck that you don't want to be associated with, right? That's you go to casino, you win a windfall, right? But then there's persistent luck, which is where you create a lot of dust, right? You keep walking around and you create that luck around you. And then I think there's also a luck that finds you, like, which is what Gordon was saying, which is you've built your character in such a way that somehow it will find you. I think the example was something like, if you're the best diver in the world, right? Someone who has the blind luck of finding that hidden treasure will have to seek you to go and get that treasure, right? And then he'll split it with you. And that's the kind of luck you want to create. I'm just borrowing from him here, but I always, I love thinking about that topic.
I think I don't have much to add here, man. All these guys have kind of taken the lines out of my mouth, but I think one of the things that's important for a startup is like, I think like all this, all the folks on the panel are saying, you just got to keep trying, keep hustling, right? Like those things matter, right? Then, you basically give yourself a chance to create that opportunity. But I think if you kind of turn it on to a startup context, it just means that you have to survive, right? You have to do whatever it takes to survive before you can thrive, right? And that comes to a couple of things, right? Trying to find product market fit as quickly as you can, making sure you have like a long runway, you have cash in the bank. Like those things are the components and the ingredients so that you have a chance of success, a chance of like making sure that at some point, an inflection point in the market or market timing, you have a chance to make something big. So I think that's the way I kind of interpret luck, right? Which is like those things will come, right? Like I need to keep ideating, keep your hustling. But like as a startup, my number one job as a founder is to keep the company alive, keep the lights on, right? And if that happens, like you have a chance for all these other things to happen and follow suit.
All right, thank you very much for your responses. So one last final question before we open the floor to Q&A session. Is there any advice you would give to your 20-year-old self? Right? Imagine if you travel to the past and you see yourself like in your younger days. Like, is there any advice you would like to tell him?
Well, like the first thing that came to my mind was that you shouldn't have picked up smoking. Right, yeah. But anyway. Right, I muted myself, right? So I have to say something. So I guess like back then, you were always sort of thinking about like what kind of value you can extract whenever like an opportunity is whenever an opportunity comes your way, right? So you go for interviews for internships and stuff like that, and someone offers you the role, and then you start thinking, what can I get out of this, and start nitpicking, right? So I guess like what I would say to myself back then was focus on what kind of value you can bring to the table, and then I think like naturally value extraction happens on its own when you bring like to the table value, right? Especially when you're young, um like not really in the position to sort of like start asking what can be done for me before I've done something, right? Yeah. Yeah, and don't pick up smoking. Yeah.
I'd say try many things. Um, I mean, the real thing I want to say is don't study law because that's boring. But the maybe the more practical thing that I would say is like try many things. If you're studying, say accounting, don't just do all accounting internships. Like go try many things to find out what your real love.
Yeah, not much to add, man. Experience, just gain experience.
And this is a tough one. I think honestly, I just kind of feel like my life planned out the way. Like even if I went back, I'd probably live it the same way, right? Just because like all this experience have kind of like brought me here, right? So I think that's the PC answer. But if I can't think back, like what was I doing at 20? Probably like NS, right? Not even sure what happened then. Probably less time clubbing at Butter Factory and Zook, and should have spent time working at a startup probably. That would probably been the right answer.
Sadly, those places are closed.
Yeah, you guys don't have much of a life now.
Hey,
So
just revealed
which is
it.
why you're doing this
Revealed
fintech
his
channel.
age, man.
Yeah, you totally give away your age. Butter Factory. Nice.
Yeah. No, I think Brother Factory was still open during my time, but yeah. So yeah, anyway, digressing a little bit here, but yeah, so we have the first question. I think you guys covered the first part already, like with regards to hiring, what are the things you could look out for, right? But the second part of the question would be, I think the more important part is how important are grades to you guys for a new hire?
How important is what? Sorry, I missed that.
Grades, like grades, your
Oh, like
academic grades, yeah.
right. I mean, since I'm muted, I can go first, right? I think we place some emphasis on it. I think in terms of holistic candidate assessment, like getting a good grade in school, it tells me that you were able to kind of commit to something, you put in effort, you kind of followed up, right? You were diligent, which are skill sets and attributes that are good for a startup, right? Where you need to hustle, you need to work hard, you need to be diligent and delivering things, right? But obviously, you don't just take a candidate with the highest GPA. I think that there's a minimum level of bar below a certain GPA where I'm like, dude, like what was this guy doing? Right? Unless there's a really good answer for why he didn't show up to class or why he missed a lot of classes or why he failed a lot of assignments, right? There's gonna be a bit of an orange, I wouldn't say red flag, but orange flag until I find out. I think there's a minimum score, and beyond a certain GPA like 3 out of 4, like it doesn't really matter, right? It's just gonna tell me then you're gonna like start placing a lot more emphasis on other things that you can kind of quantify, which is like problem solving, how he performs during the interview, character attributes, like those are things that we place a lot more emphasis on.
Yeah, I just had this conversation with our intern like last week, about grades and stuff. She asked like the exact same question, and it's like not a very popular answer, right? Especially because everyone's in uni. So I told her like just quit school. No, I didn't. No, like honestly, when like we do get applicants, right? Like I don't really look at grades that much. The first thing I try to zoom in on is like the sort of like relevant, even for students, right? Like relevant past internship experience. If it's sort of like someone in third year, fourth year, I don't even know how GPA is calculated because I didn't study in a local uni, so I don't resonate much with that. Thinking back on my own time, right? Like when I got my job, besides like the first one, like so with Property Guru and Carousel, I just like wrote whatever in my resume. No one actually asked to verify. No one asked me for my certs, for my transcript and things like that. So like even at that time, I don't think it was that important to them. And like personally, like grades isn't like the first thing I look out for when someone applies for the role. The most important thing would be that first interview, which is something that we do in Surer, right? Like the first like 20 minutes, like we don't even talk about like your resume or anything. Like just want to understand you as a person, your character, like Mo mentioned, and how you'd be a fit, right, for the culture that the company wants to build. And like yeah, if you don't get past that like first 20 minutes, then like even if you get 5 out of 5 GPA, like it doesn't really mean much. But that's me, right? Personal view.
I'll just limit this to fresh graduates, right? And hiring fresh graduates. So same as Gordon. I don't even know the GPA or look at the GPA of any of the hires we make at Brick. And we operate in Indonesia also, so I don't really have an idea how good your university is, other than the top uni that everybody knows. So it plays a very small factor. What we look out for are, it is a factor, but a very small factor. What we look out for are signs of hustle, right? People who like to do a lot of side projects, people who have done internships at maybe Spenmo or Aspire, show an interest in the startup space. That's what we look out for.
Yeah, I agree. I think for us, it's a maybe minimum bar, and I can see how this, as you become a larger and larger corporation, it starts to become more and more of a minimum bar or like a requirement. Right? But maybe early on, that does early startups not so important. We never used to look at it. In fact, I think we still don't. We kind of use our own assessment, right, to kind of understand math or logic capabilities. But yeah, I think the last point that Gavin said is really what I tend to look out for. Like, what's your story, right? What did you do aside from school? Where did you naturally gravitate towards? What extra steps did you take to improve yourself in those areas? Yeah, those are the things that really stand out to me.
All right. Thank you for your responses. So our next question is from Min, and his question is: at what point do you like call it quits on a product or a service or a direction that you and your company is facing, and when do you actually divert and focus on another perspective?
I think this is a hard one, right? Because I mean, it's context, like something, like an experiment in like a B2C space has different metrics from like a B2B feature that you launch, right? But I think it's just, this is where I think it comes down to a lot more like gut instinct, a bit more like art than science in particular, especially when you're launching like a new feature that you've never seen in the market or something that your product's never done before, or to like a new segment completely. I think just kind of being honest with the team, right? Like you always have like a launching team for a particular new feature, and just kind of caveating like, okay, we're putting like, $20,000 into this experiment. We're going to dedicate like 2 engineers, 1 PM, and like maybe 1 growth guy into this. And this is probably the experiment that we should run for 4 weeks, right? I think Spenmo, we kind of realized that 4 to 8 weeks is a good benchmark for us to kind of get feedback, right? On whether things are working or not working. And I think working has like a very vague definition, like what works in B2B, because I think you will know in B2B, the bar for a customer using or liking a product is really, really high compared to B2C, right? The bar is really high for a CFO to kind of figure out like, oh, do I like this as a new feature or not? So I think we just look kind of like for sparks, right? And we treat things as like, feedback is like, hey, I didn't like this because you're missing all these things. That to me is actually good feedback. That whatever you build as an MVP is actually good. There's something there, right? Like those experiments where you launch something and like nobody says says anything about it for 4 weeks, never touches the feature, never clicks into it, then it's probably a sign that you probably shouldn't be building it, right? But I think you can solve all this by just talking to customers, doing like frequent pulse checks, frequent surveys, especially if you have like big whale customers, talk to them a lot more frequently. And I think it's something that's like probably unique to like me and Joel is that we typically deal with like CFOs and like finance teams. And these guys are probably the best black and white guys in the company, right? They will tell you to your face like what sucks, what doesn't suck, right? And that to me is a blessing in disguise. It's a bit painful sometimes when you just take it on the chin, but you know exactly what you have to do. And so I think we haven't, as I kind of look back on the last 2 years, our experiments have gotten better and better just because we talk more to customers, they give us feedback. So by the time we even launch an MVP on experiment, we have a fairly good idea that it should be a good one. Just, obviously you have to invest a bit more in product quality.
Yeah, super true. I think I think one of the helpful things is actually setting that time frame for yourself, right? Like you have to be disciplined about it. You have to say, what's the cycle that you're looking at, and that forces you to make a decision, right? I think at least early on in my own journey, I started out not being as disciplined, right? So kind of like Mo said, sometimes it's a bit of an art, right? And you're guessing and you're saying like, oh, there's certain pickup here, or some people seem to like it, right? But without a real time frame to say like, okay, let's make a call by X date, that can run wild, right? So I think having that time frame and then maybe setting up the clear parameter of what success is going to be, right? When you launch a feature, there's so many different type of metrics depending on the context, right? And deciding that metric to measure versus time frame is probably how we look at it. And then maybe in larger company direction kind of things, we do kind of OKRs quarterly. Then, you have your yearly kind of strategy retreats kind of thing. I think, all those sound quite corporate, right? But I think they're actually good rhythms to put in place for a company, because it kind of really forces you to take a step back and assess, what you've accomplished last quarter, what your position for next quarter is going to be, and then measure that. Yeah.
I'll add a bit color to what has been said. There's this very big vision that all startups, all founders want to reach, right? And something I just want to normalize is pivots or small pivots along the way to that vision is normal. There's 1,000 different roads to Rome, and you're trying all those different roads and find which is the fastest road and the fastest or easiest road to that vision you want to get to. So it's something normal. In terms of methodology, Joe and Mohan has spoken a lot about it, so not much to add.
Yeah, we like waiting for me to say something, right?
Yeah, if you want to.
Nothing much to add, right? Like just that point on what Gavin mentioned. It's important to have that North Star. So something that you're always chasing after, a vision, right? That you probably never like achieve in like the short term. Stick to that, but like how you would sort of get to that point, right, can be very different, and be open to it. Be open to listening to your customers, be open to listening to like your teammates, peers, and then tweak that pathway, right, to that yes, like North Star vision that you have. Yeah.
I see. Okay, the next question, a close friend of mine texted me, so I'm gonna read from her text. Yeah, so is what has been the happiest or most fulfilling moment in your startup journey?
It's the team. It's seeing the team happy, seeing the team growing, seeing the team thriving, working together. I think a lot of people here will have the same answer. So yeah, that's the number one thing.
Yeah, just to add a bit on that, I mean, I think one of the things that we are seeing quite consistently at Aspire is that somehow we tend to hire people with an entrepreneurial blood, right? And they tend to be outliers and high performers, right, in the company. And but I think every once in a while you have someone that's ready to go and take their own journey, right? And that's it's bittersweet, right, when that happens, because obviously from a company's perspective, it's like, oh man, losing such a great player, right? But on the other hand, like you're really happy because yeah, they're gonna they feel that they're ready, they're gonna make their mark in the world. And yeah, when I reflect back, I've seen like multiple folks come out from Aspire and start their own thing now, right? And that's you genuinely feel really happy for them, and you're like rooting for them, right? Yeah.
I guess
Anyone else?
oh
Got it.
yeah, mine's fresh, right? Since we are still really young and small, but like one of the like really is something that we really celebrated was having our first paying customer. It was one small one, right? Subscription. But that was something huge for us, because then you suddenly feel like, oh, you know what? Like all these sort of like, we launched a year ago, but like the product building and like the ideating and then like the testing and all that has been like a lot longer than like just like last year, right? Someone willing to pay, someone sort of like taking a leap of faith in sort of like the solution that you're providing. That was something that I guess like in the last year we celebrated the most, right? Yeah, got a little bit drunk, but yeah, that was one thing that stood out for us. Yeah.
Because of the last one now, I think I think all the points that the other panelists have kind of mentioned kind of resonates very deeply as well. I think in particular for Spenmo, I think one of the happiest moments was when we got into YC last year. And not for the prestige of getting the accelerator. Like I said, the story was that we got into accelerator, we were desperate to kind of get in to get the 150K check. And it was for a purpose so that we could make payroll. And even though COVID was really tough, a lot of VCs weren't deploying capital. And a lot of early investors were like, hey, you should cut the team, cut deep, go hard, right? Don't just lay off one guy, lay off 8 people at the same time because you need to survive, right? But we just, as me and Isak and Andika, who are basically the co-founders of the company, we just didn't take payroll for 3-4 months. We survived. We didn't ask anybody from the team. And when we were able to kind of go to YC, get the 150K paycheck and kind of start the journey again, was probably one of the best experiences I had. So I think it was just going from a really dark place to something that was good. And the fact that we didn't have to lay off anybody during COVID makes us really proud.
Cool. Yeah, so Josh kind of asked the next question, but yeah, so do you guys have any exit strategy or any plans? But I think for the second question, part 2 of it, I think probably you guys maybe can touch on in a group setting, in your team setting, if someone have a disagreement with you guys, how do you guys settle that kind of disagreement? Definitely in startups, everyone has strong voice opinionated people around, and how do you guys settle it? Yeah.
I think I can go first on this one, right? So amongst my co-founders, so Renfred and Darren, we've got sort of contrasting personalities. So Gavin knows all of them, so I guess he'll attest to that. But you learn to sort of play off each other's strength, right? So with one of my co-founder, at the start there wasn't that much of a chemistry, although he's my brother. We've never run a business together before. A lot of times we were rubbing each other the wrong way, right? What are you trying to say? Why are you always bringing this contrarian view? Why is it always negative when something is there for us to sort of celebrate about? But the important thing that I've learned, right, is to appreciate having someone, right, who brings to the table a different point of view, and being able to sort of digest everything that's been said without jumping the gun, right, and assuming stuff. A lot of people they deliver sort of their point of view very differently, right? Some would come to you and provide you with all the facts without giving any recommendations yet. So if you cut him off, right, and you start sort of making assumptions about why he's sharing some stuff with you, right, then you're not sort of drawing that value out of having this other person with you as a co-founder. So I guess how we, it was a natural learning process, right? I guess we figured it's not worth anyone's time just going in circular arguments. So you naturally learn to sort of understand. First and foremost, you have to sort of trust that this person wants the best for the business. That's the basic, right? And then you start to learn how to sort of distill what someone is saying, and then drawing understanding his or her point of view, and if there really is sort of a deadlock, right, on a decision to be made, and the decision is meant to be made fast, then we just vote. There's 3 of us, majority wins. Yeah, I guess yeah.
The original question is more interesting. I want to answer that.
Okay, you can answer. Yeah, if you want to, yeah, go ahead.
Okay, yeah, add some color to that question. So, yes, people have already left Brave, although it's still very young. And what I want to say is this is normal. People should be leaving, and the company should be cutting people that don't fit the culture, don't share the same vision, right, early on. The great companies, great startups that we see have terrible churn. Whether is it Revolut, Lazada, I'm sure there are some companies that still perform well and have a great culture, but churn would still be high in the early days. If it's kumbaya, everybody's happy, targets are easy to hit, then you're in the wrong place. Like Joe said earlier, you're joining an early stage company, you're an angel investor in some sense, and you're wasting your time there if everybody's happy and you're hitting your targets every day.
I can just add one last point. I have to unfortunately bounce in 5 minutes, but I think people have left, right? And I think it kind of comes with the company growing, right? Like different stage, I kind of alluded to this earlier in the conversation, is that you'll need different kind of skill sets and different kinds of people, right? So the guys who join you early on, they're like the wild cowboys, right? They have multiple headers. They can do a lot of things generally well. But as you kind of grow, you need a guy who can focus on certain thing and kind of go deep, right? Which means that people who join early at the seed stage, they also need to unlearn, relearn, learn new things, right? As the company grows as well. And I think that's some of the challenge that we kind of face, which is early joiners are great. We obviously owe a huge amount of debt and gratitude to them. But it's also tantamount to them being able to kind of fit into what a Spenmo at Series A is like, right? Where I need them to go deep, right? Not just double heading between BD partnerships, a bit of website development, a bit of coding, right? I was like, dude, you need to just do product. You just need to do BD. You need to focus on it now, because that's how we kind of get to the next level. And certain people do that. A lot of people do. We try to coach them into that. It's not something that we kind of just say overnight, hey, focus on this. But sometimes it just, again, I think even at a place like Uber, which has a great hiring culture, and managers do a really great job of hiring, only 7 out of 10 decisions are right. Even at a big place which has 12 rounds of interviews and all this crazy psychometric tests, right? So what more for an early stage startup? The only thing you can do is be cognitive of it, be open with your early employees, talk to them, and don't kind of tell them hey, you haven't been hitting your target for 6 months, I have to let you go today, right? You need to almost give a personal improvement plan, right? Hey, performance has been kind of waning, the company is shifting, in the next 6 months, I want you to have this plan, right? Try to hit these things. And if you do it well, we'll keep you. And I think there's space for you, right? As we are growing. But if not, I want you to be cognizant that, it's just not you. The Spenmo needs a different kind of person, right? I think that's going to be very, very important. And I think as a founder, sometimes you have to say no, right? Again, no matter what we say, I love everybody at Spenmo, but we're not a family, right? I think family almost comes with a connotation that whatever you do, whatever your performance is, I will love you, right? And that's not possible in a company that has ambitions to become a really, really big company, right? You need the best guy, the best player on the team in each position, right? And if you kind of think about all your families, I'm pretty sure there's somebody in your family that you're just bound to by relationship, but he's not a high performer. You can't kick him out because he's family, right? And you can't have the mindset at an early stage company. Doesn't prime you for success. Yes. By the way, sorry, I have to bounce, but love meeting all of you. If you need anything from me, I think Jared will probably give you my email. Happy to stay in touch. It was great fun to kind of do this with all the other panelists as well. See you guys.
Yeah, thank you.
Bye-bye.
Thank you for your time. Yeah.
Thank you.
Joe, you want to add on anything? If not, we can get into photo taking. Yeah.
No, let's go ahead, man. I don't have much to add. I think
Okay. Anybody, if you guys want to turn on your cameras, and then we can take a group photo. Yeah, okay, so I guess that's all. Okay, 3, 2, 1. Okay, thank you. Yeah, thanks everybody. Thank you the panel for such a great sharing. Yeah.
thanks, guys. All the
Thanks,
best.
guys.
Thank you very
Guys.
much for your time, guys.
See you guys in the ecosystem.